Welcome back everyone, hope you all had a good Easter. I'm Philip here from BlackBull Markets, and today we're going to be discussing a couple of charts. We'll be looking at some all-time, well not all-time highs, but some very highs in a very long time. We'll also be looking at a couple of chart patterns and also key levels where the market has broken through and are currently stuck on. So make sure to stick all the way through to the end of the video to see what we're looking at and what potential setups we could have for the rest of this week. Also make sure to smash that like button, guys. Subscribe to the channel if you guys are interested in learning more about Forex and improving your current trading skills. So without further ado, let's hop onto the charts and see what we have. So first of all, we're looking here at CAD JPY. This is the hourly term time frame. You guys can see we've already been pushing up quite a lot. We're seeing some nice movement to the upside, but if we have a look here at the weekly, monthly term time frame, actually, we can see looking back here at January 2016, or if we even look, early, actually January 2015, we're seeing some highs that have not been reached since then. So we're seeing the market has now broken past. If I get an array up here, we'll use these wicks over here that we saw previously. We also saw it in roughly about November 2012 as well, right before the world was supposed to end. And then we also see it here at, now like I said, January 2015. So I'll pop over this ray roughly about that spot. I'll get a little bit higher just so we can go above these highs as well. Just right over there. Okay. So we can see we've now broken past it. So we're heading back to these fairly high, highs we're seeing since 2007, 2006-ish. We haven't seen, highs like that. So we're starting to run back up to there, but we do have a bit of a resistance coming up in the shorter term view, looking back here at 2015 as well. So zooming back in again, these could be potential targets for the market to reach to. So if I have I'll quickly get a resistance zone popped up here for you guys as well, so we can have a look. Sitting here at the 104, 120 mark zone is a pretty key level. So if we drop it down to our lower term time frames, we can see here for our term time frame, we're still kind of running up, so there are no real patterns. So we need to start looking at patterns that could help us get back into the market. So by patterns, I mean, we could be looking at sort of structure breaks. We could be looking at breaks and retests where the market could re-enter back on again. Obviously, now we've had a run following a break and retest. If we look where this actually was, we can see it was based off this high from March 28th of, roughly about the 28th of March, we can see it was on there, the market broke past it, hesitated a bit, and we saw a nice rejection pushing the market further higher. So there's a bit of an entry to reach up. Now, obviously we have this resistance that was coming up, the 101, I've got it here on my charts, was a strong level to go to. So we've broken above the 100 mark zone. We saw the market struggle to do it, and eventually now did it with a lot of strength. Now we're running back to those highs that I was speaking to before. So we're really going to have to look at the lower term time frame. So let's have a drop down again to the hourly. Again, there's not many patterns happening up. Ideally, we want to see some retracements or any sort of structure in the market. So be aware, guys, when we see the market reach these these highs or these big resistance areas or very key market zones that happened back in history, we're not just going to be taking trades just based off of the market moving up, right? We're going to be looking for structures. We need to start looking at structures. Obviously, there's not much here happening. We have to wait for something. What I'll be waiting for, because we've reached these zones. If we do look to the left, obviously there's no traffic for ages, back there. So we'll start be looking at patterns, things like, so for example, personally what I want to be looking for, I'll quickly draw it for you guys here. I want to start looking at any sort of patterns where the market could give us an indication where it's taking a bit of a break to go further higher, or even, something where the market could give us like a bit of a rest and then break further higher and then come to break and retest on that area, like we see back here, and we saw the market break further higher, give us a bit of a rest, and then continue further higher again. So it gives us these opportunities to jump back on board, get back on that train for the market to continue the move. Now obviously, like I said, if we do take a trade right now, there's no logical place where we could put our stop losses, so it's a very bad risk trade. We want to be waiting for those entries for the market to slow down a bit, give it a bit of a breather for us to move back in. Okay, so keep an eye on CAD JPY. It is reaching some very highs we haven't seen in a long time, so make sure that's a pair that I'll definitely be watching. But something that a bit more immediate, I'll be looking here at the Aussie. A couple of Aussie pairs I wanted to show you guys is we've got AUD CAD here as well. As we can see, following this beautiful channel to the downside, I'll pop it over to the 4-hourly term time frame. You guys can see big trend coming to the downside after we actually did follow off of a resistance. So we can see a bit of a head and shoulders sort of structure playing out here. Beautiful structure. We saw the neckline, even though, generally speaking, when I trade, I don't use the neckline that much. I just focus on where the shoulder is. I focus on this rejection and place my trades based on that. A lot of people wait for this neckline to break, but I feel by then, you know, we've missed so much of this move. We've missed the entire market move already, waiting for this market to break. It's already started to slow down, as we can see. So for me, it's not really a good place to get in. I rather prefer to look at shoulder. But however, we did get this beautiful structure, did follow the neckline very nicely, and we saw that big rejection, and now we're starting to move inside this channel to the downside. So this could give us some more opportunities to get back into the market. I'm going to zoom out a bit. Want to see where this market could run to first, see if we have the opportunity for the market to push down. We do have some good zones to look at. I want to pop it over here. The reason being I'm not using this low is because we saw a previous rejection on there. We also saw support back here, some resistance over here. So that's the reason why I'm using it. I'm not using all the way down to the extremity. So you guys can see we have some space to play in. Let's pop it over to our hourly tone time frame, and we can start to look for certain market structures. Okay, I'm gonna pull this channel just a little bit further along so we can see if we have any potential entries right now. Right now, for me, there is not much. We have getting close to resistance. Let me zoom in. I'll get this back on scale, zoom in for you guys a bit so we can start looking at structures. What I'm seeing right over here is a bit of a resistance coming up. The market has not quite reached it yet. Okay, this for me is not really a valid place to enter. Just because the market's taking a break doesn't mean it's going to continue for the downside, right? I'm looking for I'm looking to put the odds in my favors. We can see here, this is kind of what I'm looking for right over here. We saw it. The market rejected, came back up. We actually touched this trend line again to push for the low. So that's kind of something I'll be looking for as well. We could potentially see the market kind of, you know, take a bit of a break, retest to that trend line. That's what I want to be seeing, and then the market to push further to the downside. That's ideally what I want to look for. Okay, if this market does happen to drop, doesn't give us any entries, that's fine. You know, as traders, you know, there will always be more opportunities. So don't worry about missing a trade if there's no entry signal, guys. If the market does not meet your criteria, there's no point to take the trade, okay? Because then you're just trading based off luck, and you're not trading any rules, and if you continue on that path, you will eventually do some serious damage to your account. Okay, we don't want to do that. We want to follow set rules. This is where traders become profitable. This is how traders become successful. They follow their rules to the point, and no matter what, even if the market does move, if you don't get an entry, there's no point taking the trade, because then you're just guessing, okay? We want to try and put the odds in our favor, and we want to react based on what the market gives us. If it gives us support breaks or the resistance or rejections on areas, then we want to start looking for trades. Okay, now in saying that, let's have a look at the other side. If this market does decide to go north, all right, if this market does break above, we could look for specific moves. Now, the one thing that I always mention is when we trade back into market structure like this, we always have to be very aware of support/resistance zones, where this market could come to reject and cause a bit of problems for us in the future. First one I've got here, roughly about the 0.9, just above the 0.9 to 3,000 mark zone. So I would say about the 0.93100 mark. Okay, it's a good area to look at. Then again, we've got 0.9333 is a good target. And then again, I've got another resistance here, 0.93660 is another place to look at, okay? So be aware of these zones. Okay, we also have this one that's most recent, 0.92890 as a target to look for. Okay, if the market does not reject here to push further to the downside, we could look for this market to break up. Now again, guys, I always give two sides of the trade. People always say, yes, but now you're saying up or down, you know, it doesn't really make sense. You know, why don't you just give us clear, specific trades? The reason for that is, guys, the biggest reason is I'm not here to predict the future. And traders aren't here. Hopefully you guys aren't here to predict the future either. That's not the job of a trader. We're here to solely react on what the market gives us, okay? So if we're, for example, if we're sitting on a resistance, right? The market's sitting on a resistance, okay? It's giving us, we haven't got any confirmation yet. No one can tell me right there that sellers are going to come back into the market 100%, okay? No one can say that. No one can also say that buyers are going to come in and break that price. We just don't know. So we have to react based on what the market shows us, okay? So obviously we're sitting at resistance. Let's say the market's starting to slow down. Chances are, yes, the market could come down, okay? Chances are high. So what I'm going to do is I'm going to take a sell here, for example, but I will have a stop loss. A stop losses are there in case I'm wrong, okay? They're there to protect us. Now, if this market does go down, that's great, okay? But in the case where it comes where the sellers just aren't there for some reason and the buyers decide to take over for some reason, and it does break higher, I'm not going to hold on to my sell, okay? I'm not going to be hard-headed and stubborn and say, no, this market has to go down. I've done my analysis, It has to go down. No, I want to say, okay, well, the market's broken a high. Chances are it's going to continue further higher, right? That's just a logical thing to do. And that's why I don't give particular analysis. I'm not going to say this market will drop down here, because the simple answer is I just don't know, okay? I'm looking here at levels. I'm seeing where the market reacts. I'm saying these are the chances. We've seen patterns like this play out in history over and over again. And we've also seen highs being broken over history again, okay? So let's continue on to have a look and see. So let's move on to, I want to go to another Aussie dollar. I want to go to AUD JPY. Actually, AUD USD is a pair that I want to look at. We've broken below some serious resistance areas, okay? Looking at AUD USD, right, we've had a potential, this is again a perfect example where the market could have rejected, but it didn't, all right? Let me show you this. So we had this resistance zone, okay? There's your entry, or let's say there's that signal, that green candle, the market's ready to go up. That's a perfect signal. We saw the market reject a couple of times. It's no reason not to take this trade to the upside, right? The market shows us it's broken past the resistance. It's now using it as a support. It's just a clear entry. It's very clean, very obvious, okay? But the market then goes, no, for some reason the sellers decided to reject on that resistance right over there and decide to push the market down. That's fine. That's why we have stop losses, guys. That's why it's so crucial as a trader. You just have to have a stop loss. If you're trading without a stop loss, something's not right, okay? You need to use a stop loss. I can tell you right now, there are no successful traders out there who don't use a stop loss, whether it be a mental stop loss, which is very difficult to follow by, or a physical stop loss, okay? Now, when I say mental stop loss, is these guys are disciplined. They are more disciplined than most people that I know, okay? Because a mental stop loss is they actually say, if the market reaches this price, I will manually close this trade. Now, think about that, right? It sounds easy, but think about that. If you sit there and watch the chart reach that zone, you need to be saying, I am wrong, I'm going to close this trade. I struggle with that, so that's why I use a physical stop loss, okay? Just pop a stop loss there. If the market hits it, it's done and dusted. I don't have to do anything. I'm just going to start looking for other options, okay? So now, let's have a look at this. Market's broken past this resistance, right? Let's redraw that. Broken past this resistance. Big red candle. We're seeing this first candle now starting to reject into that zone. So we could be starting to see a zone of entry to push this market further to the downside. We have some pretty strong supports coming up. I'm looking here if my line is straight enough. Roughly about the 0.72 to 500 mark zone. Okay, that's kind of where I'm looking at. So that could be a good target to push to. If we do go further lower, obviously we're starting to hit into some serious muddy traffic. Right, so this is a pretty clean zone we can look to trade into. Nice obvious target. Now the opportunity for the market to go further higher is still there. Alright, so let's pop it down to the lower term time frames. I just want to quickly have a bit of a deeper breakdown for this. Bit of a deeper look. And let me draw this. I want to draw this up here first. Okay, so if you guys see these wicks right over here, okay, I'm going to be using those bases of the candles as a support as well. Okay, so this is for me. Right over here is my support / resistance zone. So pop it over to the lower term time frames. We can see the market is starting to struggle around that area. Right now, there's no clear reason the market's ready to go down or go up. Personally, what I want to see, if the market wants to go up, I want to see a nice big candle, really, because we've got this resistance zone coming up. I actually want to see the market go above that and close above that zone. This will be a pretty decent confirmation for me to say the market's ready to move on, move further higher. We've got a bit of a trend line coming as well. But this candle, if it does close above the zone, it'll be a fairly decent indication for me that the market's ready to go up. Okay. Now, if we want to look to the downside, if we can stay below this area, I've got it here 0.73535 is what I'm looking at here on my charts. If we get a nice strong close, even if you guys can see these kind of structures over here, if we can get a close below that, that'll be great for the market to continue further to the downside. Could be a good indication, guys. So again, I just want to make it very clear, guys, that it is very important that we always focus on both sides of the story. Okay, I'm going to say it again, traders, we're not here to be right or wrong. Okay, we're here to just exactly follow what the market gives us. If we're wrong in our position, learn to close it, let go of your emotions, let go of the trade, move on, look for the other side. Very plain and very simple. Okay, guys. Now, if you did like this video, guys, make sure to smash that like button, subscribe to the channel as well, guys. Comment down below if you've subscribed, or If there's anything you want us to analyze, any specific charts, anything like even if you guys want us to do commodities or indices, we'll be happy to do those as well. Comment them down below and we'll be happy to analyze them for you as well. Guys, thanks so much for watching. Enjoy the rest of your week. As always, stay tuned. Trade safe.